Hello and welcome to the Watchlist Wednesday. It's Invest with Rules. It's Scott Bennett and Mike Olafson. We're going to cover a lot today. We have some watch list tickers that are really interesting as the market's moving around a lot. Let's dive in. Before we do, world's quickest disclosure, this is just information. It is not a direct solicitation to go buy or sell anything. Please always manage your plan, manage your risk, manage your rules. Very simply, we enter positions on either kind of half positions on blue or full positions on green. We start removing positions on yellow topping, and we completely typically head for the exits on stage four or that pink. If we're within like a millimeter of risk, there was a chance a couple like last week where silver and silver miners were right there, but it kind of held and ran. We're just watching it incredibly closely. But in general, the short-term signals about roughly 30 days of data. The long-term signals about a year. This has the same in all disclosures like the secrets in bull and bear markets with Stan Weinstein, the theme, but the engine is a little bit different. So what we've back tested it beyond belief. You can see a lot of those on our YouTube channel. So what I want to do really quickly is just kind of we use the trend, we follow a lot of the billion-dollar fund manager data. We do have to have a system to cut it. There's just a lot of stocks. So we cut it for liquidity. We are specifically looking for fund buying and fund holding or recent buying. We're looking for growth. We want to see at least 10% earnings growth, and that will let you see the companies like where the funds sometimes go to hide, like Costco or like there's a couple other tickers that are kind of slow movers that like Walmart, but that's where the funds go to hide during tougher times. And then also we want to see a little bit of a smoother ride. So not just how is it returned, but how is it returned. So we like to go through this watch list with you typically once a week. And very simple, if it's a new change, that tends to flow to the top, meaning that it's the signal is like, hey, this is new change in signal. So physical palladium. And that's something where if the economy is slowing growth, slowing inflation in the US, and later in the year it's going to be rising inflation, slowing growth, this is a really good environment for things such as precious metals. They tend to do pretty well. You've already seen gold and silver do quite well, so it could leads to ground of palladium and platinum. So in general, you're seeing a lot of precious metals. You're seeing a couple of stocks that we'll look at. Very simple. You'll have our ranking, our categorizing, our signals, our daily change, our short-term VOMO simply is the last 30 days. How is it done in comparison to its volatility? And we stack rank it. And then if one happened to use our short-term trend signal, what is the unit of risk that is out there? So before I dive in, let's go chart by chart. We're going to start with physical palladium. If you were to look at a really long-term chart of this has gone pretty much nowhere for years.
Yeah.
But it's interesting. Something's happening where you're starting to see some serious volume bars come in. And could it make a break and kind of make a big move? It's possible. It's a relatively thinner name, thinner physical palladium. I don't believe this one has a K1 tax
Nope.
form. If please always do your own due diligence to try to, if you care for those or you really avoid those like the plague, those extra tax things that come with some whether it's futures markets or physical metals. Anyway, short term, long term uptrend, it really needs to get over this, maybe kind of make a break and then sit back down and make another big run. But physical palladium, a lot of the precious metals are on our radar. The move really hasn't even started yet for a lot of them. Gold has, but not a lot of them. Any thoughts before I move to the next one?
No, this is no. Let's leave this one. I think you summed it up well. So let's go to the next.
Okay, now gold has moved a lot. This is if you're a sovereign nation and you're not ready to buy treasuries in the US, where do you go with your capital? You can go to gold. It's super liquid, it's easy to grab. So, in general, whether you use the paper version or the physical version, totally your call. But short term, long term uptrend, you're definitely seeing this is an uptrend. It's making higher highs and higher lows. It pulled back, it held it nicely. Is it maybe extended from some people's view on the internet? Of course, it could be. Our view is very regimented in relative strength index, and at the moment, it's not. So could it kind of test all-time highs and go higher? It's possible. We're seeing slowly some fun buying in the gold shares as well. But gold, silver, we have a position at the moment. We're watching it closely, but it's doing everything right so far. GDXJ, which is the junior miners, or GDX if you prefer the megas. But I know sometimes they mine in places that are more volatile in the global universe, and that's totally your call, what you're comfortable with. Short-term, long-term uptrend. The short-term trend is back on, up 3.2%. The long-term has been going since the start of this year. That's pretty awesome. I mean, just think about it. This year has been not fun for the stock investing world. But if you're a junior gold miner fan, you're up 40%. How sweet is that? That is alpha, that is outperformance. Any thoughts on gold or gold juniors, Mike?
Yeah, similar charts. And once again, kind of looking at it from a charter standpoint, a purist, where, higher highs, higher lows, doing, like you said, nothing wrong. And I'd kind of like to see, and I know these FinViz channels are automated, but they're appropriate. And I'd kind of like to see both of these continue on in that channel and just kind of continue to make slow higher highs, higher lows, and do nothing wrong.
Yeah, I mean, you can kind of see how it gapped up. It
Yep.
filled the gap right here where I'm pointing, and then now it gapped up again because everyone's like, I mean, I think China reopened from kind of a holiday, and now you have another gap. So could you fill the gap and make another? It's very possible.
Yep.
So let's look at Spotify. So Spotify is interesting. It's number 22 this week on the Big Funds 50 list. Spotify is think music, think podcasts, and just kind of media. But you had a pretty lousy earnings reaction and then a phenomenal late day recovery. So the funds came in, bought this thing up, and that's a support day and what most people would say. And you broke out and you're sitting on top of it. And we'll see where it shakes out today, but it's on our list. So could it, in theory, break up and out of here? And then you have what's known as a green line breakout. Mike, what's a green line breakout?
Ha. So for folks that we've mentioned this a few times, but for newer folks, thanks to I was first introduced, I think, via Investors Business Daily. I'm sorry, Dr. Eric Wish, I think, was a guest on one of their podcasts, and he's a professor at the University of Maryland, and he came up with the concept of green line breakout, all-time highs, and did a lot of back testing, studying on it. So it's a fascinating concept. Google it, look on YouTube, and you'll find out a lot more.
Yeah, and just the thesis at a high level is there's no one with losses. So it's hard psychologically to sell when you don't have a loss, and no one has a loss because it's at an all-time high.
Yeah.
So and Spotify is there, so the funds are after it. And now we're back to GDX, which the same concept as GDXJ,
Yeah.
just a little bit bigger movers. They're the acquirers versus those being acquired. Again, pull back today on again some pretty light volume. Mike has some comments on utilities. Obviously, they power the data centers, they power our homes, short-term, long-term uptrend. Any thoughts on Utes before I go to the next page?
Yeah, actually, we'll throw out another shout out to Investors Business Daily. You were just on their IBD Live recently, and they had mentioned UTES, the Utilities ETF, that's an alternative to XLU. XLU is the SPDR, the standard utilities ETF. And upon their mention, I did a bunch of research on it. Here's a good summation of it. UTES, which has a bit more concentrated and different holding of companies in the ETF, has significantly outperformed XLU over the last, in this case, 3 years. And you could see kind of it's really outperformed over various time frames. So we've now put UTES in our stable of roughly 80 ETF tickers that we analyze every day, and it's a good one as an alternative to XLU. Now, if you go back to the chart for a second, there you go. I think it's arguably extended at this point. So still on a gas, long-term, short-term uptrends. RSI is creeping up, but I'd argue it's a bit extended. What are your thoughts, Scott?
Yeah, I think it would. I mean, could it go a little bit higher and catch that 72 range and then kind of, or just sit back down? I would say, yeah, you've had, I mean, significant, what is that, like 7, 8 days in a row of uptrends of all up days. So this would cause us for a pause. I'm going to share something, Mike, I didn't prep you on, so prepare yourself mentally. We have the Big Fund 50 tab in the live sheet, and we share it on our site in the members area. We're also working on an ETF, kind of a list, a sheet, a rank. And what's really interesting is we know that stocks and large cap like global stock indexes tend to trend for longer periods of time, but a lot of ETFs don't. They tend to travel for maybe a month or two and then go in favor, out of favor. So there is more. We've done a lot more back testing on, and you've seen us do it. We just haven't really discussed it. But like, why did we buy China Tech, or why did we buy some like silver? Or it's one of those things where it's done well over, let's say, several months, but it's on a little bit of a pullback. It's like a reversion to the mean type of a trade. So we're working on it. We'll tend to share it with you. It's not necessarily ranked performance high to low, but it's a little bit of like an opportunity list, and we're on that too. So again, utilities, they'll show up more closer to down here versus up here, which gives us the opportunity to not try to buy extended. All right, I'm going to move to Chucky Schwab, Charles, SCHW. This isn't Schwab, Fidelity, Robinhood. They're all really interesting. I think Robinhood's coming up in our list. But when the
And
world
it's next, yeah.
gets scary and people lose their jobs, I hate to say it, but these companies tend to do better, meaning that the money's moving and it can move into some of their higher margin products. It's just the
Yeah.
reality of things that happen. So Schwab is wildly diversified. Their A is growing as a firm. We don't hold money there, I as a firm, as our advisory firm, but in general, we know that they're obviously very sound. The funds are buying, so it's number 35. It's in a short-term, long-term uptrend. It's been in this range for the entire year. It would not shock us to see it at some point maybe pull in one more time before making a beautiful breakout. It's not super growth, but there's growth. Mike, any thoughts on Chuck?
Yeah, I think without seeing a long-term chart, in fact, I'll take a look as we're discussing Hood next, but I think it's going to be a potential another green line breakout, if I'm not mistaken.
Yeah,
But 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 segueing into Hood, it's kind of interesting. You could argue that the two are competitors in a way, but I'd say not because, in fact, anecdotally, I know a lot of folks who have both Schwab accounts and Hood accounts, Robinhood accounts, because they're using them for different things. What are your thoughts on that, Scott?
I would say it's a little bit of a different demo.
Yeah.
Schwab, the all-time high was closer to 96 as I'm peering over to my right.
Oh,
Um,
okay. Thank you.
Robinhood, Robinhood is newer merchandise. Robinhood, they all have credit cards, they all have benefits programs, they all have sticky things. Robinhood gamifies the trading a little bit more. Robinhood is getting into sports betting. So they're tending to appeal to a little bit of a younger demographic, which comes with more growth potential. I think back to when did Robinhood? I watched that movie where the GameStop movie on Netflix a while
Yeah.
ago, and there's a moment where they halted the stock on their platform, and it burned a lot of people forever. And I just don't think they're ever going to cave to a hedge fund ever again. I just think that they know who they serve, and it's not someone shorting GameStop. And I think that they're a little bit of a different company than they were during those tough times. There's your double bottom. It's forming a nice tight consolidation. Could you make an all-time run? If you were to go back, I don't have it on me right now, but if you were to go back to a weekly or a monthly chart of Robinhood, it IPO'd in the 30s and it ran up to 80, and it looks right now like a cup and handle on a weekly chart. So Robinhood has a lot of potential. We're going to watch it closely. We had one position, we got stopped out. We would love to consider it again. There's a lot of interesting merchandise with Robinhood that can really survive, in theory, even more tougher markets, just because they're making money on the trading flow. So they are using companies like, again, I'm not exact, but like Citadel, where you submit your order as a market order, and they'll route it to who they want to route it to, not the best order. So in theory, you could get a penny here and a penny there, and we know pennies add up pretty quick. So in general, Robinhood is still trying to get you a decent fill. They're good to they're trying to be better to their clientele, but in general, this chart looks interesting as it's moving tight and sideways.
Yeah, two quick comments, Scott. So first off, on a monthly chart, if somebody takes a look at a monthly, you'll see, yeah, serious cup and handle action going on. So it'll be interesting to see what happens. Second comment, and this applies to Spotify as well, the power of the long-term trend signal. This is almost a four bagger now, over 500 calendar days, so less than 2 years. Spotify, if memory serves, was, I think, over a five bagger, if I remember correctly, or close to one. So, oh yeah, thank you. So we'd all be lucky to be in either one of these and be riding it for the past year and a half, 2 years, and have this kind of return. But it's the power of the long-term trend signal. If you are an investor and not trying to move in and out, but trying to go for long-term gains, that signal is really powerful. But you do the downside, and nothing is ever perfect. The downside is a lot of volatility. And you can just see in the hood chart, the daily chart, you're in that. You've had to withstand some volatility, some negative some downside from recent highs.
And they do a lot of crypto trading too, so that is also tied to the price of Bitcoin a little bit. Okay,
Yeah,
so
yeah.
we'll move to Celestica, who does electronic parts. They're out of Canada, and the new prime minister just came to the United States. Who knows what your opinion is on that? I'll stay out of it. But CLS, short-term, long-term uptrend, billion-dollar fund manager number 17. It is kind of moving sideways. Earnings are out of the way. The growth is there. Obviously, this is a volatile ticker. It's still relatively like right above the small cap range, so it's heading to mid cap. But Celestica is interesting. Could it make a tight range and make a breakout? It's possible. So on our radar, you have all the way now until July until they have earnings, but Celestica is on our radar. Whether you like to use CIBR or HACK, or whatever cybersecurity you have, we own a position in CyberArk out of Israel. But there's obviously yesterday morning, I actually listened to the video. Paul Tudor Jones was on CNBC freaking everyone out about how he went to a cybersecurity or a tech conference, and there's a percentage chance that AI turns on the human race at some point, and whether it impersonates a person to get security clearance or does something horrific with a weapon arsenal. He's freaked out, and this is the cause for more cybersecurity. So
Yeah.
this is the answer to what could AI do to harm us into the future. Short-term, long-term uptrend. This is an ETF, so there's no necessarily billion-dollar fund manager rank, but you're seeing obviously some powerful move. And could it kind of sit back down on 66 and make another run? We have a position in CyberArk. We'll see how it goes, but there's a lot of demand for where this is all going and who could actually help protect you and me and the whole system. Okay, that'll do it. Any final words, Mike?
So Tudor Jones, well, I have a lot of respect for him. Just a fantastic trader for the past, what, 30, 40 years. That's kind of freaky what you just laid out. We got enough human inflicted problems. So if we layer in AI problems, it's kind of a bit worrisome. But I will comment on cyber. It's similar to UTES, the utility ETF we looked at, where maybe a bit extended, but certainly doing the right thing. So we'll keep our eyes on both of these.
Yeah, yeah. If you want to get freaked out, you can just YouTube that. That'll really send
Okay.
shockwaves in your bones. What could go wrong? Holy smokes. Okay, so we're gonna stop there. So again, follow the trend, follow big money, please follow your risk management rules. We're not out of the woods from a macro perspective. The market's kind of at this jump ball area where it could go a little bit higher. It could easily roll over. Please follow your process. Thank you for being a member. If you have questions for us, hello@investwithrules.com. If you're like stuck in the mud and frozen and you're like, man, I could use a little bit of help. It doesn't need to be everything of your net worth, but in general, we try our hardest to follow a similar process to this with a lot more customization and a lot of financial planning, all as a fiduciary. That's hello at IWR Advisors. Totally separate business. We just want you to know, just generally, we greatly care very much about your situation. So whether we can provide you with data and research and help, and I always think about like if you were to take a step back and could our research just help save you a ton on the next down move, that's totally worth it. And again, we would love for you to do well to support you and your family and make sure that when the next shoe drops, if it does, that you have a plan versus just kind of writing it down and then feeling miserable. So we don't want that to happen. Mike, what's coming this Friday?
Picker Submission Friday. It's always a lot of fun. And so, yeah, you'll be sending out an email tomorrow, right?
Mhm.
Requesting one ticker per member. And we'll do our best to get to them all. And typically, it's a lot of fun because a lot of tickers, some that we know. And I think just about every time there's some tickers that we don't really know, and we learn something new. So it's a lot of fun.
Yeah, we'll try to get to as many as humanly possible without
Yeah.
destroying you with the world's longest video. But again, again, thank you for being a member. Thanks for your time. We will be on the live sheet. We'll send you that fun daily email, and then we'll send you all that for Friday for the ticker submission. Email comes out Thursday to submit that. Again, thank you. We'll talk soon. Have a great day. Have a good day. I hope this helped you kind of identify some either uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com. Thanks so much.